Hey traders, welcome to the US equity market update. So as you guys know, we've been bearish US equities for some time now, and that is pretty much playing out the way we said it would. Lots of red on the cards yesterday. Pretty much everyone was red on our watch list except for Pfizer. But as we can see, we can expect more of this bearishness ahead, in my view. Those inflation figures yesterday, another one that really hits hard, hit the markets hard. Obviously, talks of rate hike increases if inflation rises too strongly are taking their toll. And you can see that with what we've seen in the US markets since basically the 10th, beginning of the week, just pretty much a straight line down. In terms of structure, we're going to look at this as a little ABC corrective structure and a little bit of a wave failure and now acceleration to the downside. So in terms of the S&P, we're probably due for at least a little bit of a correction here. In terms of a move back to new highs, kind of crossed that point in terms of this structure. So we're looking at this as, in which case, at the very least on the lower time frames, you'll need to see us slowly chop back up to those highs at 42.50. Or it's part of a much bigger corrective structure. As we know, the higher time frames are really oversold or overbought, excuse me. So we may be in for something a little bit more deeper in terms of the corrective move, in which case we'll need to wait for corrective structure on the S&P to resemble further downside. So kind of waiting to see where to from here. But yeah, so far so good in terms of downside. And when you look at the higher time frame structures on something like Triple Q, it's more than likely going to be further downside from here moving forward. Just a reminder where we were sitting on the higher time frames, right at the top of the structure. So it's possible we start to correct back into kind of 2020 territory, which is quite a big corrective move in that case. So this may be the start of something fairly big. And that's kind of what the charts are saying, but I can't really clarify that until we confirm it with price action structures on the lower time frame. So that's going to take some time to play out. But for right now, we maintain our bearish viewpoint as a result of looking at some of the other equities. Dow Jones Industrial just getting smashed from those highs. The Russell, pretty much the same thing. Got a little bit of head and shoulders top here on the Russell. We spoke about a little corrective structure and then acceleration to the downside. And it's exactly what we've seen and we should continue to see moving forward. Facebook pulled back pretty strongly from the highs. In terms of the structure, it's a little bit more confusing than Apple or Amazon, but kind of following the same lines. We should see at least a pullback towards kind of 260 at the least. But that's a little bit uncertain. So I'm much rather, if we're looking for trades, I'm looking for shorts in Apple, which should go break the lows at kind of 106 to 100, maybe even deeper, as we spoke about previously. We suspected we might see a little bit more of an expanding flat rather than a corrective structure that is a running flat that will stop at around about 110. And when you look at the structure that we're seeing at the moment, you can see how we formed the perfect head and shoulders move here for a breakdown towards below $100 on Apple at the moment. So yeah, really interesting looking price action on Apple. And then Amazon, obviously the same thing. We've seen that big move from the downside, pretty much acceleration all the way from the highs at the moment, which doesn't give us much in terms of alternation. So where that means one of two things. We're either going to see a choppy move at some point and move sideways for a couple of weeks, or this is going to continue accelerating and go beyond our kind of 1-to-1 region back into the kind of 1.618 territory, as members will know about, which is really interesting. Just have to wait and see how things are going to develop moving forward. But so far, call on Amazon has been pretty much spot on. Microsoft starting to pull back as well. Nice big move off those highs. Should see that continue to the upside, to the downside. But in terms of structure, there's not much there for us. Netflix getting good acceleration to the downside, which we did speak about and have been speaking about for some time now. Nice big gap to the towards this 500 region, chopped sideways there. Spoke about this as a nice little flag to trade to the downside, and now we're getting that downside break. That should continue to the downside as well. Google started to turn finally, although pre-market has come back up. So Google is just in kind of crazy territory at the moment. When you look at the chart, we've basically had a straight line from 1,000 all the way up to current levels, 135% straight line move on the higher time frames. So we're really overcooked here. If you're looking to get long Google, I would really suggest using call options and just really capping your downside potential there, because we've moved so far without a decent corrective structure. We're sitting right at the highs, beyond the extended levels. So just be really cautious there. AMD looking really good. Structures playing out as we thought, a little bottoming out here potentially at 73, and might see a little bit of a rally kind of up towards $80 before seeing a pullback from here. In terms of structure, it looks a lot like a bit of an expanding triangle rather than ABC. So I'm more inclined to think what we're seeing here is something along those lines. We've had this move to the downside, and now we should see a little bit of a rally and then an acceleration again to the downside. It's kind of what the structure says to me at the moment. We have to just see how things play out. If we get this little E wave, we might just see this accelerate to the downside moving forward. But the structure itself doesn't look complete to me, and we should just get a little bit of a pop higher up towards potentially 80, somewhere in that region. Boeing breaking down nicely. In terms of structure, looking pretty good for also a potential decent little rally here, because this B wave has started to take a little bit of shape here. We've got a nice little central structure moving forward. So we could see a little move down towards kind of 220, maybe even deeper. Then following that, we should see a little bit of a rally to give us our C wave. And then that's going to be a great place to start looking for that short, because this is the kind of corrective structure we're looking for on a lot of our stocks, where we're looking to kind of get out of a big move in the highs or off of the highs, where kind of the financials being the key example of that. So we're looking for this exact same structure where you have this impulse off the highs, you have an ABC correction, then you short that next move for the higher time frame move to the downside. Higher time frame on Boeing a little bit kind of difficult to gauge. Potentially going to see a move back down to the lows at 88, but I'm not going to kind of hang myself to that too much, because the structure itself is not ideal. It's more of a zigzag correction we're looking at there on the higher time frames, in which case we're not too interested in it, because zigzags are difficult to trade in terms of structures. So but I would be keen to trade this little structure here, in which case we're probably looking at closing this gap at 158, which in itself is a really nice little move to the downside from those highs. You're looking at a good 36%, 35% sell-off there. So nice little setup if it does play out. Alibaba continues to accelerate to the downside, playing out textbook to what we were expecting. Nice little ABCDE corrective structure, nice break of the wedge, tiny little flag there. You have to hold on to that for a little while as we retested that section, but now we've accelerated nicely to the downside. Full target is around about that 200 region, and should continue to see that. At the very least, we should break these lows at 210. So nice little trade there. Going into some of these financials, exactly what we were speaking about. You're looking for this little corrective structure, exact same thing as Boeing. You're looking for this push off the highs and the correction to confirm you've seen the highs, because this is a longer time frame trade to the downside. We're looking to trade this probably back down towards the lows last seen in 2009. So this is a big move that we waited to see. We're just looking for that turn, the change in the corrective move or change in trend back to the downside. Financials across the board looking really worst. We may see a big top here. So again, we're just waiting for that confirmation, which may take a little bit of time to play out. Berkshire, exactly the same thing, waiting for that big move, waiting for the correction, and then looking for the short. Up until then, you just have to be patient with the price action. As we've seen before, you get these little moves that look like they're starting to go, but then they accelerate back to the highs, make new highs. So we really want to just be patient with this, waiting for that corrective structure to form. Beyond Meat has been one that's performed really well for us. I was expecting one last little move higher to give us a little wave of a running triangle, but that just accelerated to the downside. So in terms of the structure that we're looking at here, you can see how potentially you might just get a little bit of a pop higher from here to give you more of a, not an ABCD, or maybe it's an expanding running. That's also a possibility. But more than likely, this is actually going to develop into an ABC running flat. Kind of been difficult to trade this one, but if you traded this little break to the downside, you got some really good downside. And we expect much further downside to come because our downside target down in this one is kind of sub 48, so probably 45 downside target. So there's a big move to the downside to come. Apparently earnings weren't very good. You saw pretty bad earnings statement coming out, which caused this little sell-off or kind of accelerated this little sell-off. We have to just see how this is going to develop, if we are actually going to get this little pop higher, or we're going to have to look at that itself as our little triangle. Something along these lines may have been the little triangle that we were looking at, A, B, C, D, E, and now accelerating to the downside. So kind of a range of possibilities, but basically if you get any low rallies here, you want to sell those and hold on to those shorts. Citigroup, another one, waiting for the shorts. We went to break the highs with this last move higher as we expected. So now we're waiting for this little price action to the downside to continue. But right now, just kind of waiting patiently for financials to make their move. Camco was an interesting one. We made new highs on Camco. It kind of looked like it was breaking down. And we broke out of this wedge to the upside. So again, still waiting for an impulse to the downside and a corrective structure. A lot of this is going to be dollar based. I think if we start to see the dollar really start to move, then we should see further downside. In terms of the structure, potentially shifting back towards the big ABC corrective structure rather than this is a central wave. So you could expect to see some decent upside if it does continue to run. You might see uranium start to catch a bit of a bid here. So it's kind of middle ground of what we're going to do here. Do you really want to buy this at these levels? Maybe some call options on the long is going to work. A straddle will probably work really well from these levels, where you can gain access to that big upside if it is going to play out as that big ABC, which means kind of 41 upside target, or big downside. If we start to accelerate to the downside, you should see this go sub 5. So we'll straddle in this region. Longer term straddle could work really well in your favor moving forward. CMG, Chipotle kind of continues to accelerate to the downside. Been interesting to see structure wise. If we continue, this means we saw here was a bit of a wave failure, and this should continue to the downside. So basically, we're waiting for a corrective structure to form on the lower time frames to find a little bit of a trade in this region as a short. But there's better shorts out there, to be honest, given better structures. So DraftKings was one of them. This is one of the trades that's played out really nicely for us, where we were looking for that running flat to form. Perfect little structure, and then what we've seen since then is a massive acceleration to the downside. So this has played out really nicely. Same with Penn stock. As you guys know, if you're looking at our Twitter feed, ABC running flat, big impulse to the downside, expecting this to continue to the downside as well. So these are those more speculative stocks that we looked at, kind of post 20, big speculation, big run-ups, which should have really big fallbacks as we come back into a kind of more sane market moving forward, especially as these bigger stocks start to sell off. So these speculative stocks are leading the way, and we should start to move into the more speculative or the more well-known names, and then from there probably into financials. So Disney is a good example of that. We started to see new lows in Disney this week, and Disney looked like we'd seen that same structure we were looking for those major highs, where we wanted an impulse, a little bit of a corrective structure, ABC. In this case, I think it was actually more of a triangle than an ABC running flat, given the structure. And we should see this continue to the downside to go break and close this gap at 157. So expect further downside there. EA, kind of chopping around in this region, not much in terms of price action. So it's been a bit of a challenging one. We just know in the higher time frames, we do like the downside. We did say we can expect a little bit of a choppy move back down to these lows at 125, and then maybe another move higher. And that kind of seems like what's happening, but this is going to take a long time to play out. You can expect to be here in this region until kind of July. Expedia, another one of ours that was a really attractive looking trade, and they're starting to accelerate to the downside. Downside target on this one is this gap at about $100, 106. So should expect this to continue pretty strongly to the downside moving forward. So like we spoke about, a lot of individual stocks looking like further downside is on the cards. Same with Ford, nice little corrective structure off the highs, nice little wedge breaking out or breaking down in yesterday's session. So we should continue to see further downside here. GDX, I suspect gold may have topped out at that 1850 level, which kind of ties in with what we're seeing in this running flat in GDX, and we should see this start to accelerate to the downside. I'm still a gold bear. A lot of people are saying gold is breaking to the upside. I think that's just corrective. It's coming out of a correction from basically February, in the same way that the GDX has still been in correction since December 2020. And then after that corrective move, we expect an impulse, which should accelerate pretty strongly to the downside. I'm seeing the same thing in gold. So it'll be really interesting to see how the next few days play out, especially if the dollar starts to turn like I suspect it has turned. Goldman, again, financials lagging. So expect that move, that correction, and then the move to the downside. So again, we're just waiting for a kind of confirmation corrective move that gives us license to get into the short and hold that for longer term. Morgan Stanley, same thing. I'm not going to get into too much detail there. IBB, our biotech trade, looking really good. Nice big dump over the last few days. We should see this accelerate back up to the highs to confirm the structure. That's going to give you a nice big corrective ABC, complex corrective ABC for a really nice short in this region. So if we see this price action, this is going to be one of the top shorts on our list, probably from that 160 level. And we should see this accelerate to the downside. Higher time frame, as students know, much deeper down target than a lot of these other shares. So we'll be watching this pretty closely, hoping that this little structure actually does play out. It's a bit of a messy structure because of the nature of this central B wave, but it still is on the cards for this corrective structure to play out. It's the only real thing that makes sense to me at the moment, unless it develops into, or we have to look at it as an expanding triangle overall. But anyway, you want to start to fade any rally to the upside. IBM, so to see a bit of a pullback from this region. I would really like to see IBM get back up to this 160 region to short, but we did say all we really need to do is break these highs at 137.60, which we did do. So anything that resembles downside corrective action, we do want to get in, because the downside to this one, again, really, really big. We're expecting this to go and break 89 to the downside. So percentage terms, that's a really nice move. Although I'd really like to see this get up to 160 before that happens. So maybe we see a rally in IBM over the next few days before this turns to the downside. We'll just have to wait and see. Intel Corp, again, as you can see by the arrows, another call that's been played out pretty perfectly, seeing this accelerate to the downside, kind of forming that topping structure we're seeing as well, which suggests a much deeper pullback to come moving forward. A bit of like a head and shoulders type structure there. So watch for this to continue falling. Obviously, these tech shares are the ones that are going to hit hardest with these inflation numbers, because the yields, as yields rise, the valuations of these companies drop. That's exactly what we've seen over the last few days. So watch for this to continue to the downside as inflation figures continue to come in higher than expected. Johnson & Johnson. This is an interesting one. We were expecting downside on this, but we just continued to chop higher. So in terms of structure, we're very much at a level where we should start to see a pullback, but this is starting to look like a correction, a corrective pullback for further upside down the line. So yeah, structurally speaking, you can expect upsides of around about the 200 level moving forward. We're just going to have to wait for this structure to play out. So Johnson & Johnson is kind of held up against selling pressure, but as you expect, the rest of the market should continue to sell off, which could put pressure on Johnson & Johnson and put you into that buy zone that we were looking at, this 155 level, if we are going to see this as a corrective structure. In terms of a complete structure, we aren't quite there, so you might actually see further upside before you get that pullback, but there's nothing really in terms of action we can do, actions we can take here until this clarifies itself. So kind of looking to buy up here or potentially sell if we get another leg higher. And what we can see then is that we've got a complete structure where that is your central wave. You get one little pullback down here and then another move to the upside, and then you can look to sell once these highs are broken. But until we do that, we're kind of in no man's land at the moment. JP Morgan, another financial, kind of same game plan. Not going to get into too much detail there. Live Nation, our little sell-off that we were looking for, has played out really nicely. And we've got a nice little structure formed here. So nice little ABC and a nice big acceleration to the downside. This should continue very much at least to 69, but more inclined to believe we're going to see this accelerate probably down towards sub 50, potentially deeper than that, maybe even to 25 zone. So this is a very big move to the downside to come potentially if we have seen the highs. And so far, price action is confirming that. So again, like we said, on financials, this is exactly what you want to see. Impulse of the highs, nice correction, and then an acceleration to the downside. Micro strategy as well as continue. Our little structure has played out pretty nicely, and we should see this continue probably sub 300. There's a big sell-off to come here moving forward. Big bear in micro strategy. Kind of leaves me really worried about Bitcoin at these levels as well. NVIDIA accelerating to the downside. Again, waiting for a correction for further upside confirmation, which we never got. So it's always good to wait for confirmation. As you can see, acceleration to the downside is more of confirmation for further downside moving forward. Pfizer holding up against selling pressure exactly as we thought it would. Nice little running flat, nice little push to the upside. So these calls we made back in March, and as you can see, these upside targets have been pretty much kept in line, and we should see continuation of Pfizer up towards breaking 44, potentially breaking 48. So I still like Pfizer to the upside. Just like to see a little bit of a corrective move in this region. At the moment, all we can really see out of this is potentially an expanding triangle developing here. In which case we had an A, B, C, go break these highs at 41, and then get another decent pullback there. And then you can start to look for high confidence buys in this kind of $40 region moving forward. Riot continues to sell off as we spoke about. We were looking for this to get into single digits. Look at the gap that's opened already. We are already down 70% from the highs. So this has been a really nice short trade that we were looking for, and this should continue into single digits moving forward. So Riot continuing to get hammered. Ross Stores breaking out of our little ascending wedge that we mentioned in the last analysis. Really nice little trade available here. Getting into a little bit of a concerning zone because of the structure, but I don't think that's going to play out. I really think we're going to accelerate strongly to the downside here and get some pretty big double-digit drawdowns in Ross Stores. Spirit Airlines breaking out of our little wedge that we were speaking about. We did speak about potentials for upside in here. So we spoke about kind of trading this as a straddle. We have an entry order above the highs. If you break to the upside, you get into the high, into the long. If you break down through the low side, you get into the short. And as you can see, we've broken down through the lows, and the short looks like it's on the cards, kind of following the rest of the airlines down and pretty much the rest of the general market. And as you can see, a bit of a head and shoulders structure there, breaking the neckline. That should continue to the downside. In terms of downside target, you don't really have a higher time frame structure that's very, very clear. It's very much along the same lines as Boeing, where you had this zigzag corrective move and the potential to go back down and test the lows moving forward. So I'm not holding myself to that, but we just have to wait and see how things develop here moving forward. But basically, difficult to be bullish. Starbucks, again, we were looking for an acceleration to the downside. We had a nice little impulse up. Structurally speaking, we had a nice little corrective move forming, but then a really big dump. So I think any rally here could be a really, really good sell, because that is actually giving us a nice little corrective structure. So watch for this little move to start to find a bit of a bounce up to 114, and then you can look for that short in that 114 region. Higher time frames kind of remain bearish, and we could see quite a big move here actually into the downside. If it follows the rest of the market lower, we could start to see downside targets kind of in the $70 region moving forward. So as you can see, that's quite a big sell-off for Starbucks, and a lot of these other equities showing the same thing. As you guys know, Seagate, I'm very, very keen on the Seagate short. We're very, very keen on selling this little flag, and that started to play out really nicely. And this is another one that should accelerate strongly to the downside. Downside targets of this, I believe, around about the $30 region, given the higher time frame structure. As you can see, we're looking, yeah, maybe, let's just take a look. Be a choppy move, but yeah, kind of $40 to the downside is the potential move here, which is, as it stands from the highs, a kind of 50% sell-off. So it's a big move to come. AT&T, it's been a bit of a frustrating one. It's held up really well for reasons unknown to me, but again, we're still looking for the downside. The structure is actually really clean. Nice little corrective structure for continuation to the downside. It's just about patiently waiting for the top, waiting for a high. Every little move we got kind of led to a rally. But again, we're just following that same strategy. Wait for an impulse of the highs, wait for a correction, and then get into the short. Visa, kind of fading. Wasn't expecting this fade in Visa. It was kind of in line with MasterCard. And actually, when we look at the structure, it's starting to make sense that we might start to see this follow the MasterCard blueprint and rally down towards 183 before getting some upside momentum and then a completion of the entire structure. So that actually is making the most sense at the moment. We did mention probably the best way to play this would be to be long Visa, short MasterCard. And that's kind of played out pretty well. Although when you look at these pre-market numbers, you're seeing quite a strong rally off these highs or off these lows. I mean, that's a very, very big jump pre-market. So holding on to that little Visa, MasterCard long short might just be the strategy continuing moving forward, just to see where we kind of land with this. Because there's a variety of other structures that have potentially formed here. It may have a little bit of a triangle and an expanded flat that could accelerate to the upside here. But when you look at MasterCard, the MasterCard downside has been more substantial and kind of lines up better with that structure that we were speaking about, where we start to see an acceleration to the downside to 320. So I still like that little spread trade, long Visa, short MasterCard, and then trim that MasterCard short here at 320 and watch for an acceleration to the upside because of that structure. XOM made new highs kind of unexpectedly, but pretty strong pullback from that level. Oil is kind of confusing me at the moment, but I do think we're going to see quite a big dip in oil over the next few weeks, which kind of lines up with the structure on XOM. The question is this just corrective for continuation to the upside, or are we in line for kind of a double top, potentially expanding something along those lines? Maybe an ABCDE triangle here, and this is your final wave up, because oil is showing a big dip to come, but it looks kind of corrective at the moment, or potentially corrective. But that doesn't really line up with some of the other theses I have in the market. But the fact that we broke these highs makes it interesting in terms of correction. But the problem I have is that the bottom is actually this little wave here at 54. So what that means, well, let's just check these numbers quickly. Low 54.46, 54.51, 54.13, no, 54.31 again. So, yeah, basically matching lows here, which doesn't really work, because if that's your end of your B wave, let me just get rid of these lines. If this is your B wave, or that's the end of your A wave, then this can't be a B wave. Doesn't make sense. It actually makes more sense that this was some kind of triangle or pennant structure, and this is a wave failure to the downside. But either way, we should see this accelerate to the downside, at the very least, to break these lows at 54, then we can reevaluate. So it's a pretty good short from these levels. Zoom has done well to accelerate to the downside. We're looking at this as an ABCDE, and it looks like it's played out exactly in line with that. A little bit of a corrective move yesterday, or day before yesterday. And we should see this continue to the downside. Full downside target is still in this 215 region. So that short has played out really nicely for us. LMT made a new high, which was unexpected, but in terms of lining up with the structure, we should see continuation to the downside. I don't see how this is a corrective structure for further upside. There's not enough complexity in this B wave. So I think it was just a little bit of a zigzag correction for a one last move to the highs, give you a little bit of a double top on dying momentum. And we should see this accelerate to the downside pretty strongly at that, because our downside target is probably around about 300, which is about 23% lower down from here. PayPal, another one that's just continuing to play out. Nice little head and shoulders that's formed here, as you can see, and getting some good downside. And this should continue to the downside. It's basically the bubble crash pattern playing out perfectly. Same with Tesla, nice bubble crash pattern. And this little 530 region is the fear phase where things should start to accelerate to the downside. So as you can see, pretty much playing out exactly as we thought it would. Nice little impulse off the highs, fairly decent corrective structure, a little bit of a zigzag, and now we're accelerating to the downside from there. And that downside momentum is being sustained. So yeah, that should continue. And like we said, that bearish outlook that we have has not changed. As you can see by these charts, a lot of these charts are looking for downside. I don't think there's one long trade I'm really interested in here, not even to hedge our short bets, basically full short at the moment. There are a couple of scenarios where you might see a price jump, but it's jumping into an area where we want to sell. Other than that, I don't see any other reason to be long anything else. So it kind of leaves me worried about what we're seeing in these indices. So this could be the start of a much bigger move to the downside, as I suspect. And like we said, Russell's going to lead the way, and Russell is breaking down. You'll see the rest start to follow. It's cool, guys. Good luck out there. Members, we'll see you in the members area. If you're not a member and you'd like to join us, start to learn more about technical analysis and the skills we've used to predict these markets to the T, you can find us at senecalytics.com or find me at Senecalytics, Matt Clinton, The Conscious Capitalist on Twitter, and you can get hold of me there. It's cool, guys.